Hi traders, welcome to another episode on the trade we missed last week. If you were on the previous episode, you will notice that on the last trade we were focusing on a bullish setup. This bullish setup is coming from this fair value gap that was cited here. This was the fair value gap here, all the way down to our Monday's trade. So we have a tap into that fair value gap here and a break of market structure. This was on Wednesday, last week Wednesday. And this one we have here is another break of market structure here. After this break of market structure here, we can see a fair value gap here that market can respect to go bullish. So this is a fair value gap here, and this is also a fair value gap here. So markets use this fair value gap for entry to rally to the upside. So let's just take it from here and take our stop loss here. So we have an entry that will take the market bullish from this spot to this previous high that we have here. So this is giving us a risk to reward of 3.91 risk to reward ratio. So this was what we were anticipating on our last episode. So the market just goes like this, and to the upside. Now, because we have found a setup here for that previous trade, so the next one was our Monday's opening, and you can see on our 5-minute time frame there is a fair value gap here. This is a fair value gap here. Let's take it from here. Now you can see how market respected this fair value gap. Market tapped into this fair value gap and created for us a fair value gap here. You can see this fair value gap. Let me make it clear for you guys. So we have a fair value gap here. So you take it to your low, and you see this break of market structure is here. So you have market close above that previous high. So this is our first trade for Monday. After markets tap into this fair value gap, market also created a break of market structure. The next thing is use this fair value gap it has created prior to that break of market structure here as your entry. So this would be your entry here for a long position from this fair value gap here. You can see how market played all through, tapping that fair value gap on different occasions. The markets boom to the upside. So this was our first trade for Monday, and this would have given you a risk reward of 4.35 risk to reward ratio. That was our number one trade using this same high right here. So the next trade is our trade number 2. So looking at all this, we don't have a fair value gap. We're going to use this fair value gap. No, we don't have a break of market structure if we use this fair value gap. Then moving on, you can cite a fair value gap here. There's a fair value gap here. Now, looking at this fair value gap, we have to go to our previous market price to see if market has respected a fair value gap prior to creating this fair value gap here. Now we have a fair value gap here. You see how we have a fair value gap here? Market actually tapped this fair value gap here. Let's zoom in to see it clearly. You can see how market tapped this fair value gap here, went up, but did not break any market structure here. Came down, then went up again, and you can see how the market broke this previous high, giving you a break of market structure here. And that is why we can say this fair value gap that was cited here is a valid fair value gap to place your entry. So now we put our rectangle here, and our entry should be a long position from this spot, and your take profits should be at this fair value gap here. So at this fair value gap, you have your take profit, and your take profit should give you a risk to reward 3.34 risk to reward ratio. So you can see how this fair value gap pushed markets to the downside. So if you had waited that markets would come to this spot, you would have been taken out. So it's better you put it here before the market takes you out. So that was our number 2 trade. So our trade number 3, let's move on to look for our trade number 3. So this is our trade number 3 on a 5-minute time frame. Still, we have a sell trade here because market rallied to the upside, tapped this fair value gap at first, then we would look for another fair value gap, and prior to that fair value gap is a break of market structure. If you go to your lower time frame, like the 3-minute time frame, you see that market actually closed with a candle, not just a wick. Within your 3-minute time frame, market closed below this previous low and created a fair value gap here. So this would have been your entry for this sell trade. So this is a short position from here, and your stop loss should be at this high that created that fair value gap. So and your take profit should be the nearest low here. Right here should be your take profits. And you can also see how the market takes out this low and also tapped into this fair value gap here. So this would have given you a risk to reward of 3.4, or if you had used this fair value gap here, you would have gotten a risk to reward of 4.38. So on the next one, we have a fair value gap. You see how market respected this fair value gap here. This fair value gap, market tapped this fair value gap here for our number 4 trade and created for us a fair value gap here. Let's zoom in to see our fair value gap. This is our fair value gap here. The next thing is it tap into that fair value gap. So we have a fair value gap here, and your entry should be like this for a long position. Why is this valid? This is valid because we have a fair value gap that has been tapped into at first, and we have a break of market structure here. So we have a break of market structure. You see how price broke this previous high here. Market tapped into this fair value gap and rallied to the upside. So rallying to the upside, you would have used this previous high here as your take profit. Why? Because this one is an easy peasy for the market to rally into, and we also have a fair value gap that market might respect once tapped into. And if you had stayed at the market, it might have taken you out. So it's better to just stay put on this lane as your stop loss and your take profits, giving you a risk reward of 3.58 risk to reward ratio. So on the next one we have is our trade number 5. So our trade number 5 goes like this. We have a fair value gap here. You can sight this fair value gap. It is quite obvious on your higher time frame, or your 15-minute time frame. You have a fair value gap here, and at the back you can see a breaker here. So this is actually powerful than just having your fair value gap. So market tapped into this fair value gap here. You can see the fair value gap. This is the starting of the fair value gap, and you can see how market broke this high. There's a high here on your 3-minute time frame. You can see this bullish candle here. Market broke it. The next thing we have is a fair value gap. You can see a fair value gap here. On the discount area, you can see a fair value gap here. So this fair value gap is what we'll be using for our entry at the start of the fair value gap from our order block here. So our entry would go like this. For a long position, we have our entry here, and we have our take profits at this high here. So we have a risk reward of 3.42. So you can see how the markets played around here. You would have been tempted to close your trade, to close all your positions, but you see how markets will just rally to the upside at the end to give you your take profit of 3.42 risk to reward ratio. So that was a bullish trade. And the last but not the least, trade number 6 goes like this. We have a fair value gap here, a fair value gap all the way to this spot here. So we draw it like this, giving you a demand area. The next thing we have, since we are on our 5-minute time frame and we can see spot a fair value gap here, we cite the break of market structure right here and our newly formed fair value gap here. See our fair value gap here. So before the market comes down here, we are already waiting for the market to tap this fair value gap, and we use this low here, this low for our order block as our stop loss. So giving you a long position, we enter here. Our stop loss right below this low that created this fair value gap, and our take profit should be at the previous high. You can see how markets tapped into our previous fair value gap, then broke this structure here, went to the upside, came back down to tap into that fair value gap and rally to the upside. And you can see, just like so, boom, we have a risk reward of 3.81 risk to reward ratio. So that was our number 6 trade, our trade number 6. So the next thing we have to look at is this. We have for us a tap into this fair value gap here. For the next trade we will be anticipating, we have a fair value gap here. Market respected this fair value gap, coupled with a breaker that shows itself as a wick here, and we have a break of market structure right here. We have a break of market structure right here, and also a fair value gap here. So we'll be anticipating price taking out this inducement and also rallying to the upside, just like so. So we have for us a bullish trade that will be anticipating. So you can see how price already tapped into this fair value gap. So that's to say, price may have taken what it needs to take and just want to rally to the upside without tapping this fair value gap again. But still, if price wants to come down to this spot, it can still tap this fair value gap and rally to the upside because it has Price has once tapped into a fair value gap before and broke a previous high. So guys, let's anticipate a bullish trade, and if not, we'll be waiting for a change of the market order flow. And see you guys on the next episode on the trades we missed last week. Stay tuned and peace out.